Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. This is Rod from BTA, and we are known as the Middle Traders. What I want to look at now is the VIX. This is the volatility index. Okay, basically, for short, sweet, easy to understand, it gauges the fear. Basically the fear, okay? When people get extremely fearful, the VIX is going to spike. Did you hear me? When people get extremely fearful, the VIX is going to spike, okay? Just know that right there. If you don't remember nothing else, remember what I just said. When the people get scared out of their minds, all right, the VIX is going to spike, okay? And that normally signals a problem. And sometimes it could be like what my mentor will say, it's a problem, okay? It's going to signal a problem. Now, look, what you got here on the screen is a daily chart. A weekly chart of the VIX. All right? We're looking at a weekly chart of the VIX. And we're going back over here to 2016 here. We got 2018 over here. So we're going back a couple of years because I wanted to give you an idea of how this works, okay? And then going forward, we're going to keep an eye on it because we're looking for clues. We're looking for clues on when it's time to start buying. We're looking for clues or when it's time to be careful and say, hey, you better keep cash on the sidelines. We got a problem. Or maybe a problem. I told you, if you don't look out, you get your head handed to you right now. But if we can survive and thrive through this market, this is hard trading right now. So if we can survive and thrive through this, listen, when the bull market starts, it's going to be like taking candy from a baby. Ching, ching, ching. But right now, be careful. But look, this is a weekly chart of the VIX. So what we want to see here is up top, you have the prices, okay? This is like a candlestick chart up top, right? You see the little candles. Basically, that's price up there. Right here is the VIX. These little bars, these weekly price bars, because this is a weekly chart. Don't forget, this is a weekly chart of the VIX. Going back several years. We're going back about 10 years, right? These little green bars right here is weekly price bars of the VIX. And down here is a rate of change. It tells you what was the percentage rate of change for that week, okay, in the VIX. These little histograms right here is the rate of change. Is the rate of change, the weekly rate of change of the VIX. How much it changed, up or down, positive or negative, okay? The weekly rate of change. So that's what you're looking at on the chart, all right? Up top is the price bars of the Standard & Poor 500. What is the candlesticks of the Standard & Poor 500? Right here is the price bars of the VIX, right? And these on the outside of the VIX is red and blue, and this little line in between. This is the Bollinger Band. I'm quite sure if you've been following me, you know what the Bollinger Band look like because we got a strategy called the Bollinger Band strategy, weekly Bollinger Band strategy that we've been eyeing for almost a month now. So we laying and waiting. We in the cut waiting. Okay? So now look, and this is the rate of change. So what we look for in this here, right? We look for prices. Well, the main gauge you want to look for is the rate is the VIX right here. You want to look for the VIX to spike above the upper Bollinger Band. You see that blue upper Bollinger Band right here? This line right here, that blue line, that's the upper Bollinger Band. We want to see prices get above that. and close above that. Now, when that happens, you want to look for the rate of change, this little histogram down here, these bars, to spike. Okay? To spike. That's why I call this the VIX Spike History. The VIX Spike History. Because when the VIX, which is here, jumps above the upper Bollinger Band and the rate of change spikes up into the positive, that's telling you we got extreme fear. And when that happens, when that VIX spike above the upper Bollinger Band and these histogram bars expand to the positive, that's telling you we got extreme fear, and normally the market would sell off. It would start collapsing. Okay? So that's what you want to look for. All right? Now, let's look here. We're going to expand this a little bit and see if we can zoom in. Right? Let's zoom in right here. Okay? This is back in 2016. Notice that the VIX right here got above the upper Bollinger Band and closed above it. You see this spike? You see this spike in the rate of change right there? That spike in the rate of change? Look at that spike in the rate of change when the VIX got above the upper Bollinger Band. Okay? Prices would start to sell off at that point. Okay? Prices would start to sell off at that point. So this is back in 2016. We zoomed in. Now, if I zoom back out again, you can see here that prices rose a little bit and then they started coming down. It's only until the VIX came back down below the middle Bollinger Band. We want to see that happen, and normally you can get a movement up because that's when fear has subsided. People have calmed down. Sit your behind down and calm down. Okay? Relax. All right? Okay? When people start doing that, relaxing and calming down, then you can see the market to try to rally. Okay? But you're going to see that calming down process normally when the VIX start closing consistently below the middle Bollinger Band, like right here. Look, right here. You see prices closing below this little shaded gray line? That's the middle of the Bollinger Band. When prices are closing below that, people are calming down. Sit down and calm down. Here, you can start seeing prices moving up a little better. But you want to look out for those spikes, those weekly spikes in the VIX, and it jumps above the upper Bollinger Band. You can have a problem. So let's look over here. We looked at 2016. This is another time in 2016 right here where the VIX spiked up and started closing above the upper Bollinger Band. And you can see prices had a little problem. They started to struggle. Okay, let's zoom in on that one also and see how that looks. Right, that's back. This is back in 2016 too. Okay, look here. In 2016 right here, we got that spike, the VIX spike above the upper Bollinger Band. The rate of change shot up. Okay, I'm sorry, this is 2018. I apologize. This is 2018. I apologize. 2018, not 16. We just looked at 16. Now we're in 2018. Okay, the VIX spiked above the upper Bollinger Band right here. You see that? Okay, and you see the rate of change spiked. It shot up to the upside, way up in the positive. Okay. All right. Now look what happened with price. It got a little weak. Okay. And the VIX stayed above the middle of the Bollinger Band and started closing, having trouble trying to close below the upper Bollinger Band. That's not good because the VIX is still elevated over here. That means we still got a lot of extreme fear. Okay. So, and then prices struggled. All right. Prices struggled. Okay. That was the problem. Prices struggled at that point. Now, let's look over here at 2020, right before the Corona collapse. Okay. Right before the Corona collapse. Let's look over here in 2020. Well, we had another area in 2018 right here where we had a similar problem. all right, where the VIX spiked, okay, the VIX spiked, and it got above the upper Bollinger Band, right? Let's look at that real quick. And the rate of change spiked, and prices sold off in 2018, right here, okay? You see that little red arrow? You see that little red arrow? See that spike in the VIX? Got above the upper Bollinger Band. That rate of change was shot to the positive, way up to the upside, almost 40%, a 40% change, positive change. Rate of change in the VIX, it spiked up pretty high, went up almost 40% in a week. Okay? And look what happened when you got above the upper Bollinger Band. Prices started selling off. It's having a problem because a lot of fear is in the market. The VIX is spiking. People are scared. They're starting to run for the hills. Running for the hills. Blood all over the streets. You get what I'm saying? Got what I'm saying to you right here? Well, look. Let's look again back in 2020. Let's zoom into 2020. Look, I'm giving y'all history here, all right? This is what we lean on, history, okay, to try to get an idea of what may happen in the future. We are analysts. We analyze the data. We don't need to hear from anyone on the news, anyone on social media. I'm showing you how to analyze this for yourself. Look, this is not financial advice. You know that. I can't give financial advice. But wouldn't it be wonderful if it was? Okay? I keep telling you that. Pay attention, all right? Here's 2020. Look, this VIX spiked above the upper Bollinger Band right here. Look at the rate of change spike. Almost 120% increase. Look at this thing. Look at this big spike way up. And guess what happened in 2020? Right after that, the corona collapsed. Bang. Bingo. Boom. Market drops. The VIX stayed elevated, could not get back below and close below the upper Bollinger Band. It's a problem. Okay? Not until you start getting back down, getting below the middle of the Bollinger Band, is you're going to start seeing some improvement. Okay? I'm trying to show you something here. I'm trying to drop a jewel on you right now. Pay attention to what I'm saying. Look right here in 2021. You see, I'm walking you to, we ain't just looking at the past, I'm walking you all the way to what's happening now. Okay? Look in 2021, in November 2021. Look. November 2021. The VIX spikes. Gets above the upper Bollinger Band. The rate of change expands dramatically. If the VIX spikes and closes above the upper Bollinger Band, the rate of change expands dramatically, up over 50% increase. The next week you close again above the upper Bollinger Band. You open the next week above the upper Bollinger Band. Finally, you try to get back down. Okay, but you got to start getting below the middle Bollinger Band consistently, the middle of the Bollinger Band consistently to see improvement. You're not doing that. You start spiking again. Well, what happens to price when all of this is going on? Okay, what happens to price when all this is going on? It collapsed. It collapsed. You see it right here. It fell apart. And now this is where we at now. Okay, this is this week right here. This is this week right here. Okay, you see that? 6/17 today. This is the end of the week. All right. 6/17/2022. That's where we at now. Look what's happening. It's falling apart. But and guess what? Do you see it? Do you see it? What I told you about that middle Bollinger Band. Okay, what I tell you about that middle Bollinger Band. Now we're gonna expand this thing and zoom in, because this is what we're gonna be watching into the future. Okay, pay attention, because this is what we're gonna be watching in the future. We ain't got to go through all that again. All right, we just gonna refer back to this video for anybody who want to play catch up, because we're gonna be walking with the market. I told you we're gonna walk with it. Okay, now look at this thing. All right, look at this thing when we got that VIX spike. spike. Rate of change spike. Prices drop. Volatility remains high. Cannot close consistently below the middle Bollinger Band. Prices is still selling off. Okay? We already got the spike back here. Now, the only thing I can say, if we're going to get another real hard sell-off, okay, and this thing is going to catch another leg down, I'm looking for this VIX to get up here and spike up above this upper Bollinger Band. But even if it doesn't spike above the upper Bollinger Band, if it just consistently stays above the middle of the Bollinger Band, we got problems. Okay? We got problems. Not a problem, a problem he got. Because this thing is not going to improve. If we want to see dramatic improvements, we have to get back below the middle Bollinger Band on the VIX consistently. Closing below the middle Bollinger Band on the VIX. I'm telling you, don't listen to these idiots out there on the news and different social media outlets trying to tell you some nonsense. Don't listen to me. Just watch what I'm telling you. Okay? Pay attention to what I'm telling you. Don't listen to me. I could be a complete madman. Sometimes my wife says something wrong with you. Maybe it is. Okay? But pay attention to what I'm telling you and see if maybe I'm just as crazy as a fox. All right? Might not be as crazy as they think. All right? The VIX need to get back below the middle Bollinger Band. I'm trying to tell you something. All right? I'm trying to tell you something. Now, look, let's look at the VIX with our key moving averages. Now, we're going to go straight to right now. We're going to expand this thing, right? We're going to expand this thing. Let me minimize. We're going to expand this thing a little bit, and then we're going to zoom into this thing a little bit because I want to show you something. Okay? Look, you see that VIX? This is the daily chart of the VIX now. We ain't got the Bollinger Band. We got our key moving averages here. This is a daily chart of the VIX, our key moving averages. You see that white line there? That's our 5-day moving average. You see that green line there? That's our 9-day moving average. See that green, that yellow, 21. You see that red one? That's the 50. That's the 50. Okay? 50-day moving average. And I'm telling you, when the VIX is running up and above a uptrending 5-day moving average, and the 9-day moving average is above a uptrending 9-day moving average, and is above a uptrending 5-day moving average. Look, I'm telling you now, the MACD is positive. Look down here at the bottom. The MACD is got a bullish crossover and it's positive and expanding to the upside. I'm telling you, that's not that is a sign of trouble. Okay? The good things does not happen in the stock market really when you are at these levels. I'm telling you, the VIX is warning you. It's gonna give us the clue we need to tell us when things are getting much better. Okay? Right now we're still elevated. We're above the middle of the Bollinger Band on the weekly chart, and we're still above the 5 and the 9-day moving average consistently. And when you're above a 50-day moving average on the VIX, when you're consistently above the 50-day moving average on the VIX, good things really don't happen for long. Okay? So we're going to monitor this. We're going to be watching this. Okay? When the VIX is coming down and below a 5-day moving average, normally good things is starting to happen when the VIX is trending down. Okay? But this thing is consistently above a 50-day moving average and trending up above the 5-day moving average, above the 9-day moving average, above the 21-day moving average. And the 5 is above the 9 and the 9 is above the 21. The good things really don't happen. Okay? Pay attention to what I'm telling you. You ain't got to believe me. Just keep watching. Now, I'm going to do a part 2 of this. To show you something else. That when these things happen, good things don't happen there neither. So you got to pay attention here. Part 2, we're going to look at something else that when these things happen, good things don't happen either. See you in part 2.